Okay, good morning, everybody. Looks like my microphone is working. Sorry that I missed yesterday. I know that it was the most important day for the stock market, but ended up being the most important day of my life instead. So I had a baby daughter born yesterday. Decided that she's more important than Powell. I'll show you all right quick before we get started. And yeah, the beauty of life. Good morning. Thank you, Stefan. Thank you, Irfan. So this little one right here, Miss Eleanor, has started the bull market. Didn't have a care in the world outside of her. I ended up listening to what Fed Chair Powell had to say, made some notes on it. So a couple takeaways is that he thinks that the base case now is a soft landing, which really isn't news. We've kind of always known about the soft landing part. But some other things that I wrote down is that even if they over tighten, they can always loosen up, right? They can always drop rates back. But he was actually seemingly on the side of not over tightening and not overdoing it. But the kind of conflicting the other side of the mouth basically is that we're still seeing high services inflation, housing inflation, so that half of the economy basically is still doing super hot. We still need to cool that off, and we're not going to get disinflation in that area until we see the labor market begin to come back into balance, basically. So that is the hawkish part. I would say definitely more on the dovish side. And today I'm feeling bullish to neutral. I think that we've already got a decent rally out of this. We're trading at nearly 415 right now. So I think we're going to be bullish to neutral. Probably going to end the day above the close, if I had to guess, which was a close at $410.79. So I'm looking at that 411 mark right now. We'll give it a minute. Don't want to open the trade immediately, just in case we do see a pullback on the market open. But let's see if there's any other big news coming out. 2023 might see a rebound in productivity from the record drop of productivity we experienced in 2022. Let's see. I don't expect the labor market to hold up as it is now. It shouldn't hold up as these cumulative rate hikes continue to impact the market. So it takes around a year for these rate hikes to be felt throughout the market because people don't just go out and refinance the minute that the Fed raises interest rates, right? They will wait until they actually need the money. So we're not really going to see the effects of, the full 4.5% that they've raised over the last year until probably sometime in October or so, right? So that's what we got going on right now. I made some money yesterday, $225 on some call debit spreads, assuming that we would end the day at 405. Clearly, we did that. End of the day all the way at 411, and now I kind of want to open a put credit spread. So let's zoom in a little bit so we can see. Looks like we dipped down to 414. Probably should do some price action or some price analysis before I open this one, but let me check. So we're trading at 414.61 at the moment, and if I do a put credit spread, assuming that we're going to be 411 or above, right now that's trading for looks like 15 cents in credit. So I don't think that's enough for me. Not until I have a decent analysis behind this. So let's do a little bit of price analysis before we open anything, right? Always good to have a little bit of confirmation bias before you decide to just hop straight into something. So we have some support roughly at 413.50, which was the high of yesterday. Actually, the high was 413.67, so a little bit higher than that. Let's see, 413.67 was the very peak. I would also call 413 the support, since it's the close of this candle, the open of this one. So I'll call 413. It's a nice round number that the markets will kind of gravitate towards. Markets love their round numbers. We'll mark this as red since it's on the 2-day 5-minute chart. And right now we're trading at 414.42, so we're not too far away from that. The 411, 410 put credit spread is still paying 16 now. It actually went up by $1. If we assume that it's going to be above 413, which was basically the high yesterday, that is paying us $30 in credit, which I'm more comfortable with in terms of risk reward. In terms of price action, I think that there's a decent chance that we might pull all the way back to that level. But definitely starting the day bullish, above 50 on the RSI. I'm going to make my mark for 50 so we know what's bullish, what's bearish. Turn this to yellow, extend it to the left, and turn that off. All right, so we're pulling back all the way to 50 RSI. So if we are going to be bullish today, I would imagine that we would get a bounce right here. And right now, the 411, 410 put credit spread is paying us, looks like 20 cents in credit. No, still 16 cents in credit. So, all right. We could go higher and say that it'll be above 412. Obviously, that would put us in a predicament if we do come all the way down to that 411 price target. But that's paying 24 cents in credit versus a 16 that we get for 411, 410. Maybe we can wait. I don't know. I don't know if I really want to wait with the trading at 50 on the RSI. Usually, on a day like today where there's no news, it's going to be technical based. The only big news was Powell speaking yesterday. So let's see. These are paying 25 cents to assume that it'll be above 412, which is right in the middle between these price levels. That's what I'm most concerned about. Usually I'll go down 2 price levels, but this would only be like 1.5 basically. But yeah, we're trading right at 50 RSI, so if we get a bounce in the morning, this is probably where it's going to be. In this trade, I'd probably only be willing to put up maybe 250. So not a lot of risk that I want to put down. Just considering that we're right at 50 RSI, that's what's the main concern for me at the moment. That and being just a couple hours of sleep and not getting to fully analyze the market. Welcome to parenthood, right? Okay. All right, so I opened that put credit spread. Well, hopefully it gets filled. We'll see. Robinhood has a mind of its own. Made exactly $1 on my iron condor. Do you think we're still in a bear market? I think that we're still in a bear market, yes. But I think that we're going to need data to prove it, right? So for right now, after what Powell said, I wouldn't expect any major sell-offs. But if you do get data confirming higher inflation or that the Fed is wrong in their stance right now, then yeah, I do think that we could see a decline in a bear market. But yeah, we just bounced at 50 RSI, so didn't get into that position. Trying to get the bid ask to cooperate with me, but it is being a pain in the ask. Already hitting y'all with the dad jokes. All right. This is tough. They're lowering my credit all the way down to 22 when I wanted 25 to begin with, so. This sucks. Come on now. Putin says that we will deploy more than just tanks. Says we have many friends, including on the American continent. Oh boy, gotta love war. Tesla's ripping, not really surprised, especially given the interest rates dropping after the Fed spoke yesterday. You see the 10-year Treasury yield down to 3.4. So when interest rates start reeling back like you're seeing right now, after the Fed came in more dovish than expected, you're going to see a rip in pretty much any growth stock. So you're seeing AMD trading at 86. You're seeing Google trading at 107 this morning. Basically, all the earnings stocks that were scheduled for this week are up like 5%, besides Apple, only up 2.5%. Apple is more of a good seller than services like Google and Meta. AMD, I guess, would be a goods too. But those couple of stocks would probably do better in services because we're still seeing hot inflation in services. They're still seeing pricing power. But that's not really translating into goods. Like, we're seeing disinflation in goods or inflation coming down in goods, but we're not seeing the same thing when it comes to services. And services includes like online services. It includes like food, going out to eat. It includes housing, rentals, things like that. So things that aren't like physical goods, but still sell, right? All right, so I'm trying to open this again. Now let's go in for 22 cents credit. There we go. Finally in the put credit spread. Took me a while, but I'm here. All right, so let me type that one in. This is going to be a day trade. Just opened a new SPY for... Oh, wrong strike price. Keep thinking that we're in the low 400s, but we're in the teens now. This one expires today, which is 2-2. And I got them at 22 each. Okay. Probably could have got more credit out of it. Yeah, definitely could have got more credit out of it now that we're trading lower. Probably trading for like 24, so y'all might be able to get in later and get in at a better price than I did. But first of all, watching that 413 price target, looking at 411 as the bottom end of the today is what I would expect. But right now we're up a 0.75% almost, trading at 414. So definitely a good start to the day. And we're seeing a lot of movement in growth. If we look at QQQ, this is up by 2.5%, whereas SPY is only up 0.75%. And if you're looking at the Dow Jones, which is industrials and more stable kind of stocks, this one's actually down by 0.75%. So you're actually seeing money basically flowing out of industrials, out of the staples, and into growth, is what this is telling me. If we're down 0.75% on the Dow and we're up 2.5% for Qs, people are shifting their money around from one sector of the stock market to the next. Miss Eleanor is going to come in handy. Save the U.S. economy. Yeah, maybe she can be the Fed chair pal, or maybe she can be a Fed chair woman one day and fix the economy. Somebody needs to save it. Seeing Google up 5% though. Amazon's up 4%. Let's see what Tesla's up to. I haven't checked in on it yet, but we're trading at 190. That's pretty nutty. We're almost at 200 after dropping all the way. So this is almost 100% gain in like what, 6 weeks at this point? What's the put credit spread that I did? It was a put credit spread expiring today, assuming that we'll be above 412. So 412, 411 strike prices. And then if we look at Tesla, yeah. So we bottomed at $101.81 on January 6th, of all days. And now today's February 2nd, so it's been about 4 weeks, and we've gone up 90% for Tesla. I've been dollar cost averaging into this. I'm kind of hesitant to keep buying into it. I think it's a bit ridiculous to be dollar cost averaging when, prices are up 90% for this stock. It's not to say that they can't keep going up, and I think that, until we get a bad data report on the economy, then we might still keep going up, but the risk is definitely towards the downside for growth right now, right? If a stock is up by 90% in a month, that's kind of just unrealistic, right? But yeah, I bought these at an average cost of $144 a share. Currently up by 31% on it. So I have 5 shares here. I have 25 shares on the other account. I'm thinking about cashing out some of my shares, but maybe before like a big economic report comes out. So let's go check the economic calendar, actually. I think we have some data dropping Friday, if I remember right, but biggest news today was initial jobless claims came in slightly lower than expected at 183 versus 200 forecasted, and this is slightly down. Last month was 186, so not really much change in initial jobless claims. So how many jobs, how many people claimed unemployment for this week? If we look at the continuing jobless claims, it came in at 1655 versus 1666. So the total number of unemployed people actually came down from last week. There are about 11,000 less people unemployed as of this week than the week prior, which is interesting. But I guess since it's so frequent being on a weekly basis, you are going to see more volatility in that. I wouldn't be too surprised with it. But yeah, the unemployment data is definitely showing signs of going up. We're definitely seeing white-collar unemployment. I really wish that they would segment that actually into like high-paying jobs, executive jobs, and jobs like engineering and stuff like that versus services. That would be interesting to see if they actually reported it that way. Or if they did it like by income. I would definitely think that, the higher your income, the more likely you are to get laid off, unfortunately, right now. Just because, there's been so much hiring in tech over the last couple of years, while tech companies have done so well. But now with the interest rates as high as they are, they can't afford to grow their companies as much. So they're going to stop hiring. They're going to start firing people that they can't afford to keep on because of the higher interest rates. But yeah, it looks like SPY is making a little bit of a bounce, currently trading at 414.50. Yeah, so we bounced basically immediately at 50 on the RSI. Pretty typical, pretty standard. And now we're looking at a low between like 413.50 and 413.75. So that's going to be a new kind of support level possibly for later on today. But definitely looking bullish, especially in growth, big tech names. So all the earnings companies probably going to do well this week, given that the Fed came in more dovish than what was expected. So expect a lot of movement. So actually, I wanted to cover this AMD's earnings report, and this is something that I made a tweet about that we can review. Twitter, Elemento options, IWM is on a mission. Yeah, like I said, you're gonna see all the names that got beaten to shit over the last year, thanks to the higher interest rates. They're gonna be the first ones to recover. And then all the companies that were doing well while the interest rates were going up, like McDonald's and all the staples like Walmart and stuff like that, they're actually either going to come down because people are rebalancing their portfolios, or they might, trade up a little bit and not go up a ton like we're seeing for growth names. But yeah, this was what I was wanting to talk about. AMD beat their earnings report by not paying their employee real wages with employee stock compensation and buying back shares of their stock with the profits that they've made over the last 3 years because of the chip shortage, or whatever you want to call it. Under the hood, in reality, they came in barely profitable at 1 cent earnings per share versus a non-GAAP earnings. So after they wrote off the employee stock compensation and after they bought back their shares, their earnings per share came in at 69 cents. So 69 times better earnings per share because of the money that they've made over the last couple of years and being able to pay their employees with stocks instead of money. Kind of screwed up, but it's the name of the game. You just got to learn it and trade around it. 69. Well, I trade Google. I've already traded Google. I already have a play on it. I don't think the play is going to work out at this point, but I have a 99.98 put debit spread that expires for this Friday. It's already down by like 80%, so again, probably not going to work out for me. On the off chance Google isn't able to buy back enough shares or, give off their employee stock compensation in order to beat Wall Street estimates, then yeah, this could end up working out. But Google is just one of those companies that's made so much money over the last couple of years that they can afford to make their earnings per share look like whatever they want it to. So that goes the same for pretty much any tech company and any company that's had a shit ton of earnings per share over the last couple of years. But yeah, Q's is up 2.4% today, and again, the Dow is down 0.5%. So you're seeing a lot of rebalancing right now. I want to check a little bit more into interest rates. So interest rates are actually starting to move back up from yesterday's. Well, I guess yesterday's close was actually 3.4, right? Currently, we're at 3.38, so starting to move up, interesting enough. But I want to look at the FOMC watch tool and show y'all what the bond futures are expecting now of the what they're expecting now of the Fed to do. So they're actually expecting them now to start pausing interest rate hikes in May. So not this next meeting in March, but the one after. They're expected to keep interest rates the same at 4.75 versus 4.75 is what's expected for March. And then if we just scroll through here, 475 again, 475, 475. And then they expect to cut rates by 25 basis points in November, and then another 25 basis point rate cut in December. So they're expecting not only a pause in May, but they're expecting 2 rate cuts in November and December. So that'll be very interesting to see if the Fed actually does that. So far, they're sticking with their guns and saying that they're not expecting to cut rates by the end of the year, but they also do have that safeguard of saying that they're data dependent, and if the data is coming in bad and saying that they need to cut rates, and they'll do so. So, yeah, I think we're going to be bullish until the next big data report says otherwise. I think that is my consensus for right now. And I don't think that we have any big reports coming out anytime soon. I think tomorrow we have some data coming out, but I don't think it's major data. We have non-farm payroll, so that's pretty important. We want to look at jobs, we want to look at wages, and we want to look at inflation, obviously. So that will have some impact on the market tomorrow, and then we'll have the unemployment rate also coming in. Then we have PMI report. So we do have some decent data coming out tomorrow, but I think that what Fed Chair Powell said yesterday is probably going to have a lot more weight, at least for right now. Maybe that'll kind of wear off over the next couple of weeks. Call swings, yeah, I wouldn't be too opposed to it. Depending on when the next major, maybe inflation data is coming out. If you start to see inflation peaking its head back up, then I would expect markets to definitely pull back on that. But I don't think that we have a CPI or PCE report anytime soon. JOLTS job openings again next week. Oh, that's yesterday. Looking at next week's data. Employment trends, nothing major next week. Michigan report, but nobody really cares about that anymore. And if we're looking towards the end of the month, I'm going to have to update my little calendar that I have for the premium Discord. But if we're looking towards the end of the month, we have CPI actually coming on the 14th of the month. So in February 14th, which is not next Tuesday, but the Tuesday after, that's when we might see a pivot for the market. And that's if inflation comes in worse than expected. So February 14th expiration, that might not be a bad swing trade to make. February 14. I'd probably want to set it the day before. I don't want to hold that into the CPI report. That would be pretty reckless, I would assume. But if we're assuming SPY will stay above $410 with a put credit spread that's paying us 30 cents in credit, that's not a bad trade. Usually I try to do these 30-cent credit spreads like with only a couple days until expiration, but maybe we could put a little bit more weight into it since it does seem a little bit more likely. We do have a couple, again, reports for tomorrow. So maybe after tomorrow, after we get the data tomorrow, then I'd be willing to open it. But for right now, I think I'll avoid. Am I rich? It depends on how you want to quantify it. So let's say I'm somewhat rich in terms of money. I have like $40,000 in cash. Currently developing an app which is making me feel broke, spending $10,000 in order to make it. In terms of life, in terms of my health, in terms of family, definitely rich in those aspects. But monetary-wise, I feel moderately rich, not super. Yeah, I hit the jackpot last night with my little baby being born. Hopefully she's my little good luck charm. We'll see. But yeah, we're pulling back to that 413 mark at the moment. Below 50 on the RSI. So we could be seeing a pullback here. With the interest rates going up on the 10-year. Back to where they were at close yesterday. That might be the concern as of right now. But looking at all the other data, I think we're still bullish. Definitely not where I want to be in terms of money, though. That's basically what I'm trying to say. Like, I want to be trying to be a millionaire in 3 years. By the time I'm 30, that's what I'm hoping for. And then by 35, the goal is to have $1 billion business. So Still have a lot to achieve in terms of financials, but definitely feel successful in other aspects of my life. I mean, there's four main aspects of everybody's life, I feel like, which is your fitness, your finances, your family, and let's see. I guess fitness and mental health would go together, but fitness, finance, freedom would be an important one, at least for me. I'm very much, in favor of having as much free time as I want to spend it however I'd like instead of, working for big corporations and working 40 hours a week and not getting any time with your family. I feel like that all kind of goes in together, right? But, yeah. And the other three F's, I would say I'm successful in finances, not yet. Yeah. Not a bad idea. Just funneling all your money into your portfolio and hoping that the long term sticks out and growing the options account while you can. Definitely a good idea. I mean, sometimes I kind of wish that I finished my computer science degree and I was making the $60,000 for the last couple of years, but at the same time, I would have lost my freedom and, probably wouldn't be spending as much time as I'm getting with my family right now. So, there's trade-offs to everything. Yeah, you get secured. Well, I don't know if you really get job security out of it right now, considering that tech layoffs are out the wazoo, but you get job security, but the pullback of that is, other aspects of your life could suffer. How do I feel about Tesla? I've got shares of it, not trading it, but I'm invested in Tesla for the long term, like very long term, like 10 years long term. And I think that electric vehicles are the new wave of vehicles, just like we went from flip phones to smartphones. I think that we're going to go from traditional gas-powered engines to battery electric vehicles, or whatever alternative there might be. I think that battery electric is definitely the best alternative that we've got for right now. I don't think that it's the end-all, be-all. Not really sure what would be the end-all, be-all. Hydrogen is much too expensive right now. If we could get the price of hydrogen down, I think that would be a better alternative. I wonder also if we could do nuclear-powered. But then considering like crashes and nuclear, probably not the best idea. Who knows? But yeah, Tesla, definitely bullish on for the long term. Short term, I don't really care to trade it that much. Right now it's trading at 187, and I'm actually more in favor of selling it than I am buying it. Jesus Christ, why are people spamming this? Ugh. People are spamming my Discord with a link to nude photos. It's weird though, because like the people that are spamming it are people that have been in my Discord forever, so I wonder if their accounts are getting hacked and sending these messages. Very, very strange. All right, today is Thursday. I think I'm going to wait till tomorrow to do my dollar cost averaging for stocks, though. I think that, given the rally today, given the economic data coming out tomorrow, I would rather wait until after the economic data than before it. I dollar cost average either on Thursdays or Fridays. Kind of variable, not true dollar cost averaging, but more so based on, any kind of incoming data or anything that might shake up the market in one direction or another. That way I can get a little bit better of a price, possibly, if I'm decent at predicting. If I was going to build a diversified portfolio for your newborn with 5 stocks, what would they be? 5 stocks? She loves Dogecoin. I've talked a lot to her about cryptocurrency, and she seems to be a big fan of that. I started talking to her about Doge and the blockchain when she was inside of her mother. So she seems to be a big fan of that. Every time that I would read her blockchain for babies, she would always kind of kick around. So probably gonna buy her some Dogecoin. That'll be the speculative, I guess. And I think that probably maybe Tesla. I think that's definitely gonna pay off in the next 10 years. For the next 20 to 30 years, that's kind of hard to say though. Like if I'm predicting, selling out whenever she turns 18 or whenever she's like 30, I think that's just too long of a time horizon to really predict, because most companies will probably just end up going bankrupt in 30 years, right? 90, something along the lines of like 95% of companies have gone bankrupt, or probably even more. Businesses only last for so long until the management ends up, not being innovative enough, and then the company ends up capitulating at some point. But I would say Doge, Tesla, 3 more. That's a good question. I think something that probably is underplayed right now, but I haven't really found any stocks in artificial intelligence, would probably be number 3. Some sort of artificial intelligence type stock. Maybe Microsoft, since they're buying OpenAI, or they're making a deal to buy OpenAI. I know it's a boomer stock, but they are pretty good at pivoting and making decent decisions. I don't think that it was the best decision for them to buy LinkedIn. I think that LinkedIn is not the best investment for them, but I think that OpenAI definitely has some room for growth. So if they're buying that, I think that'll add a lot of value to them. 2 other ones. Let me actually type it in. Blockchain for babies. Yeah, she loves blockchain for babies. We bought her a set of books. It's called University for Babies or something like that. There's blockchain for babies. There's astrophysics for babies. It has general relativity for babies, all kinds of nerdy shit that I'm into. So she gets to be a little special one when she goes into first grade or kindergarten and talk about astrophysics while the rest of the class is talking about their ABCs. It'll be interesting. But Tesla, Doge, Microsoft, 2 more. I'm kind of biased on it, but I don't know. Actually, I want to say Google, but at the same time, I feel like YouTube at some point in the near future is going to see its peak. Now, obviously, like, YouTube is still thriving. It's still the place to go for video content. I'm just wondering, like, what the next thing would be in terms of video content. I think that, TikTok short form content definitely has its perks. What else? If I could invest in SpaceX, I would probably do that, but that's not a public investment. What other ones are there that I can think of? Definitely think that space exploration is probably going to be a next big thing, especially in her lifetime. Not so much mine, but I would say Virgin Galactic, but I think they're probably going to go belly up. Think that their cost is just way too high for the average person. If I could invest in SpaceX, though, or at least Starlink, that'd be great. But yeah, I'm just going to put Tesla, Dogecoin, and Microsoft for right now. Will I trade Apple earnings? No, I'm not going to trade Apple earnings. I've already put up Google, AMD. Actually, Apple is reporting tomorrow, right? I might end up trading them. Yeah, they're reporting. Are they reporting today after hours? Yeah, they're reporting on the 2nd. Apple is just one of those companies that made so much money over the last couple of years. It's kind of hard to bet against them because, they can just write off employee stock compensation and stuff. Maybe a put credit spread would be a good idea, assuming over. I wouldn't want to go as low as 142. I think that's way too low. 147 I feel like is too close. Maybe the close of yesterday at 145 or 146, if that pays good. Let's see. Looking at the 146 strike price that expires tomorrow, it looks like it's paying 30 cents in credit. That's actually not a bad deal. 34 cents in credit. I actually quite like that. I'd probably be willing to put up like 250. Yeah. So I'm getting 33 cents in credit. I'm going to open 4 of these to assume that Apple will stay above 146. Max loss would be under 145, and I think that's a solid trade. Again, this is one of those companies that's made so much money over the last couple of years that they can afford to boost their earnings per share by the means of employee stock compensation and through share buybacks. So just opened a new AAPL put credit spread that expires tomorrow, which is the 3rd. And I got them for 33 each. Strike prices, again, assuming it'll be over 146. Max loss under 145. And this is obviously a swing trade since we're going to hold through Apple earnings. But do I think that bio is a good investment, like biotech, or the ticker BIO? Biorad Laboratories. This one's definitely up a crap ton, up 2% today. I've never heard of the company. Actually, you know what? I can add a stock to the Eleanor watch list. So Tesla, Doge, Microsoft, Fulgent Genetics is another one that I would invest in just for her, because I do think that genetic testing is going to do well on a long-term time frame of like 10 to 20 years. I think that medicine should be more personalized rather than, the broad spectrum kind of care that we give today. So I think that genetic testing is definitely going to have a major role in the long-term future. So definitely add Fulgent Genetics to it because they're the only company that has a decent cash pile in terms of genetic testing companies. Maybe you could look at the really big one. I forget what it's called. It starts with an I. What is it? Not Invitae. It's like a really, really big one. Thermo Fisher might not be a bad idea either. Thermo Fisher's, they're basically the marketplace for anything that's medical related. They're basically the Amazon. So that could be a safe stock pick for her instead of the crazy ones that I like. So Thermo, Fulgent, Tesla, Doge, and Microsoft would be my 5 stock picks for my little baby. Recently made a mistake, rookie mistake, sold a call at market order, filled at a way below the price. That was a bid. Yeah, market orders usually not the best. I always put in a limit order no matter what, just in case, the market makers decide they want to screw you over. Meta won't dump it, might correct, but will most likely be followed another rally. NFA. Just guessing. Yeah, I mean, Meta definitely, like, they were better than expected, or what was it? What's the words that everybody's been using? It was better than feared, right? So a beat on earnings per share is a good thing. On top of the dovish talk that we got out of the Fed tomorrow, I'm not at the Fed yesterday, I should say. I'm not surprised that they're up 20%. That's like one tail event after the other, which just sends their stock screaming. But yeah, that is a fat gap. 153 it closed yesterday, 183 at the moment, so definitely on the rise. I wouldn't be too surprised if they came back up to maybe the halfway point, or like down 50% from the top. Right now they're trading at 184. I wouldn't be surprised if they were trading at 384 divided by 2, 190 or above within the next couple of weeks before the inflation report. Wells Fargo adjusted their price target on Meta to $250 from $165. Jesus Christ. That is a huge price target increase. That's just ridiculous. Meanwhile, they're laying off employees like no other. Like, how can you think that a company that's laying off employees in order to save their margins is in a good spot? And will go up by, how much would that be? 185, 250. That's another $70 on top of the 180 that they're trading on right now. They're expecting the stock to go up another 38% while they're laying off their employees. I highly doubtful, but who knows? Anything's possible in this market. It is the wild, wild west out here. Yeah, it's true. Tesla and Apple did go up after they laid some people. Has Apple laid off anybody? I know they stopped hiring, but I don't know if I've heard any job cuts coming out of them. Oh, we got some Democrat senators calling to ban TikTok here in the U.S. I wonder if Biden would approve or not. Biden's plans to curb credit card late fees could undercut Apple and Google app stores. How would that affect them? Also, like, these have been in place for so long, and you're gonna just, like, that's just ridiculous. Like, if people are bad with their finances, then, like, there should be late fees. Like, the company, this means that all the, credit card companies are gonna not be making as much money because Biden is worried about people being fiscally irresponsible. Which, I mean, not too surprising, but I think that's kind of reckless. Like, if you want to teach people fiscal responsibility, I feel like keeping the late fees is more important. But the government hasn't really proven itself to be fiscally responsible, right? With $30 trillion in debt. But yeah, let's see. Let's check out the Robinhood. Check out those put credit spreads I opened earlier. They ought to be profitable at this point. Up currently $8. All the other trades basically gone to shit. The Apple or the AMD put that I bought down at max loss. The Google I can still save. They're reporting earnings today. I still have $54 in the trade. I put down how much? $270. I think I'm okay with losing the $270. Been making decent money on the few other trades. Yesterday I made some money on the call debit spreads for Powell speaking, and that ended up making me a good $200. But looks like this put credit spread ought to do well too. Let's see. Nvidia is definitely making its way up. That 190 price target is getting further away, but we do have the inflation report between now and the 24th, so I think I'm going to hold on to this in anticipation of inflation possibly coming in hot and sending the markets down. What are my thoughts on Roblox for the long term? I've never really played Roblox myself. I know that it's really big. Like, if you go to YouTube and search for Roblox videos, like, it is the hottest freaking thing. And I've never really understood it. But I guess, I was probably the same way whenever I was playing old school RuneScape back in the day. I used to watch a ton of, like, tutorial videos, like the Dragon Quest or whatever, the one that did all the quests and, like, guided you through it. I forget exactly what the name of the channel was, but I guess I did the same thing whenever I was young. But, like, the views on these videos are just insane. Like, this one was posted an hour ago, and I got 7.8 thousand views. This one has 504,000 views after a year. 500,000. Wait, 500,000 in 20 hours. What the hell? Yeah, Roblox videos and, like, Roblox is just so freaking big, and I don't know why. I wouldn't invest in it myself, but I definitely do see the potential in it. But that would be like me investing in old school RuneScape or Jagex back in the day. Like, at some point, people's interests are going to change to a new game, I would think. Like, there's going to be some new game that catches everybody's attention that they're going to gravitate towards and leave Roblox. But I feel like Roblox has just been around for so long at this point, and they've been popular for so long. I don't know how they do it, but yeah. Yeah. It's a long-term fad, but yeah, I definitely think that it's a fad. I don't know. Maybe it's more like Grand Theft Auto. Like, Grand Theft Auto has been around for a very long time. It's been popular for a very long time. And, like, people still play it. Like, GTA is one of the hottest games whenever they come out with a new release. I don't know when the last time they came out with a new release is. Have they released GTA 6? Or are they still in 5? Insiders suggest GTA 6 could release sooner than expected. Yeah, so GTA 6 is still not out, but, like, I'm sure when GTA 6 comes out, everybody's going to go out and buy it. Because, like, this franchise is just so freaking big. And I feel like it's kind of the same for Roblox. Fortnite is the new wave. Yeah, I could see that. Neo. I'm surprised Neo isn't up a shit ton today. It's only down. It's down 0.4%. Given that the rest of high growth names are rallying as much as they are, I'm very shocked that Neo is down 0.5%. But I guess the Chinese economy and the U.S. economy aren't really trading hand in hand. We're definitely seeing deterioration over in the Chinese economy that we're not quite seeing here in the U.S. yet. I do think that we're going to see it in the U.S., just not as of right now. I think that the economy is probably going to take another 6 months to maybe like 12 months in order to reel back, maybe even as much as like 15 months, like between 2 and 5 quarters is when I would expect the U.S. economy to pull back. All right, what else we got going on? Not really much today. The dollar index is actually up. That's shocking but the dollar index is up today, even with interest rates down as much as they fell. So the dollar index is currently up by 0.5%. If we look at the 2-day 5-minute chart, it's actually higher than where we started. So whenever interest rates go down, like the markets are expecting by the end of the year, and the Fed pivoting in November and December and cutting rates in both of those months, that means that dollars are going to be easier to come by. It's easier to borrow money at lower interest rates. So it's based on supply and demand, right? So whenever the supply of dollars is going up because of the lower interest rates, if supply goes up, then the price should end up going down, I believe. Let's see. So we're looking at supply-demand graph. Usually I base it on demand, but yeah. If supply is on the rise, this is price, this is quantity, so if supply is going up, price is going up. So the supply is actually going to come down because of the higher interest rates. So the price of the dollar, or the value of the dollar, should actually come down. But we're actually seeing a rise, basically back to where we were right before the Fed meeting. That's what it's looking like. And maybe that was a pivot point and we're headed down from here, but it's very interesting that the dollar is up while the interest rates are falling down today. But it's not all about our interest rates. It's also about other central banks and comparing our interest rates to theirs. So it also relates to foreign currencies. How is our dollar doing versus the Japanese? Or how is our dollar doing versus the euro? So you have to make comparisons, and that kind of makes things a little bit more blurry, and you can't just say cut and dry, interest rates going up, dollar goes up with it. But, yeah. Very strange that they are trading in tandem. I'd have to look into the foreign exchange and currencies and see that, but good morning, Juan. Mostly trade SPY? Yes, I do. Mostly SPY and mostly trading around big events like the Fed meeting yesterday. I ended up making a good $200 off of that. Assuming that we would go up. Usually trade around like inflation reports, any economic data that's coming up. And I like to trade earnings too. So if it's not SPY, then it's going to be an earnings play. This week I was scheduled to trade AMD. Google, I've already traded these two. And then also scheduled to trade Apple, which is reporting after hours today. So either SPY or earnings stocks for the week. But yeah, currently sitting on $20 profit up for this so far. Assuming we're going to be over 412. Looks like we rebounded. SPY. Back above 50 on the RSI, so might end up just being neutral today, considering that we dipped below 50 RSI. So maybe we end up trading below the 415 high and above the 413 low, basically. Could open iron condor on that assumption. Wouldn't be opposed to it, but considering my sentiment is bullish neutral today, I think I would just rather hold on for the put credit spread and not screw up any potential profits that I can make out of it with the iron condor. Can I show you what I did in January? Yes, absolutely. I ended up losing money in January. I made a little bit of it back. I think it was down like 800 or so after yesterday's profit. It's probably down like 600. So kind of a shitty start to the month, but usually whenever we have low implied volatility or low volatility like we're experiencing right now, It's when I usually see drawdowns in my account, so not too surprised that I got a drawdown and a loss for this month, but it was down 566. Oh, I guess that would go into February if it was yesterday's trade, but let's see. SPY called debit spread. This one I actually did, I think, make profit on 404, 405. So this is the one that I closed yesterday. And closed them at 90 cents each. So that one was I thought it was a $225 profit. Let me double check my. Just want to verify. Don't want to put the wrong data in and show people fake profits or losses. All right, so the put credit spread I opened this morning, and then I had the call debit spread. Okay, so I opened this yesterday. Oh, okay, so this is the wrong trade that I'm looking at. 405, 404, 405. I chose the same strike prices but a different expiration date, so that's why I got confused on that. But I opened this in January on the 31st, and I ended up closing it the same day, I think. Actually, that one ended up being a loss. I thought it was a profit. Okay. 24 cents. 0.24. So that should line up. I'll have to go through and add all the ones that I missed for the 31st. Let me go through that right quick with y'all. So I make sure I log all my trades and don't miss anything. All right, so starting at 951, first trade, 397, 398 to 405, 406, Iron Condor. This one I think I already managed to type in. Okay. 10 of these, open them at 23, close them at 14. 405, 404. Put debit spread, close them at 57 for $107 of profit that day. So I won on the bearish trade for that day. I didn't type that one into my spreadsheet, so we'll have to make additions. 131, close it the same day. And that is supposed to be 131, not today. 131. SPY, put, debit. This is a bearish trade that expired 131, so it was a day trade. Strike price I chose was, let's see, 405, 44. So type that one in. 405 for the long, 404 for the short. I opened total of 7 of them for $400 almost. Or no, I closed them at $400. Opened them at 42. So 0.42, 0.57, 0.42, 0.57. So that one managed to be $105 profit. Opened the call debit spread that I lost money on, 43 and 26 as was open and closed, or 43 and 24. Opened 6 of them, so that's right. Opened, let's see. So this one was expiring 2-1, and the one before that was 24. Okay, so I have 2 call debit spreads with the same strike price, 404, 405. Okay. Call debit spread. This one I already put the expiration for 2-1. This one I do think I took a profit on too, but maybe not. And then I opened the other one, 404, 405, expiring for the same day. 24 each. So I'm just going to copy and paste this one, maybe. That'll probably be the easiest thing to do, and then change the expiration date to 1/31 and change the prices, obviously, to 24. And I think I closed that out for like in the teens, if I remember right. 2 more of the iron condors. We already put those in. 4445 strike prices. 24, and then I closed them at 45. So it's a call credit spread. That's where I messed up. 45 and 24. 24.45. $24 credit each. 45 to close. So that one ended up being 126 loss. This is a credit spread, which is actually a bearish to neutral strategy. And I think there was one more trade that I opened on the 31st. No, maybe not. Maybe I just added to some positions. Oh, the Google position. I think I already typed that one, but I'll double check. Opened a lot of positions on Friday or on the 31st, but Google. This is a put debit spread. Bearish strategy. Expiration date is tomorrow, 2/3, I believe. Strike prices I chose was 99 for the long, 98 for the short. It was trading a lot closer than it is now, but I opened, looks like 6 of these at 45. Haven't closed them yet, but we'll close them soon. Open date was 1/31. Took profits on 5 of 10 of the iron condors. We already typed that trade in. Iron condors, already got that one. All right. And then I sold this one at the end of the day for 60 each. So I opened them at 43, closed them at 60. That was 6 of them, right? Let me double check. Yeah. And then there was the call credit spread that I lost on, and those prices were right. So for the month of January, draw down by $485 if we look at the calendar. Lots of green days, but the red days were really brutal. So something I've been working on a little bit recently has been risk management and trying to cut my losses to be a lot smaller. Obviously, not so great for the earnings plays that I made this week. Couldn't really avoid that, I would say. Maybe I could have reduced the number of earnings that I was holding into the Powell speech yesterday. That probably would have been to my benefit, but that'll probably cause a little bit further of a drawdown. But overall, lots of green days, but those red days were just brutal. Down 628, down 583, and then only had like one really big green day of 766, so couldn't really make up for it. But hopefully things turn around in February, especially with the new little one. Hopefully she's my little good luck charm. My full-time trader with the YouTube channel and with Discord definitely helps me in being more consistent with my income, because I do have some pretty wild swings in my portfolio. Like you saw, I was down 500 this month. I've had months where, my account drew down by like $2,000, $3,000. I've had other months where I made like $6,000. So the consistency isn't really there, but it is overall profitable. And that's just the nature of my trading, right? The nature of my trading is trading based on events, which are very binary. Compound that with trading spread options, which are binary. You're either going to take max profit or max loss. It's very, kind of hit or miss, but most of them are hits. And last year I ended up making 60% profit with $10,000 using. So as I build up the capital, we'll be making more profits, but Currently working with pretty limited capital at 6,000, and hopefully going to build the income in other places, through YouTube, through Patreon, through a new app that I'm developing, and then that money will be funneled into making the options account bigger. That way I can risk more, and I'll be able to risk, say, $30,000 in my options account, not say triple my profits. It's not guaranteed that I'll make 60% again, but at least a better chance of making $18,000 than making $18,000 with $10,000, right? If that makes sense. How do I recommend learning about the charts? I started reading Technical Analysis A to Z. I'll link that. Let me see if I can find it. Technical Analysis A to Z. That's not what I meant to. Come on now. Get the actual link for it. There we go. So it's been a pretty useful book for me so far. I've only gotten a few pages into it just because I've been pressed for time over the last couple of days. But the biggest thing that I've learned out of it is volume. So looking at, say, the resistance level right here, right? The high of the day was 415. We saw a lot of volume going into it, and then volume dropped right afterwards. So this is what's known as the trader's remorse period. So if you see a lot of volume going into it and then not a lot of volume afterwards, that means that this is probably going to continue to go up. So the penetration of the 415 mark probably going to continue. But if we saw low volume coming into this, say if we saw that same break of 415 whenever we were trading here, and now we're seeing this higher volume now, then it would be more likely that we would come back to that 415 price level and maybe even come below it. Yeah, the volume is these blue bars on the bottom, right? So definitely a bullish look after breaking that 415 mark. If you want to trade based on technical analysis, I would definitely, do maybe some put credit spreads, assuming we'll be above 415. But I've already got my trade in for the day, so not really too worried about it. Too worried about opening that. Kind of want to look at just to see what it's worth. I wonder if there's any news that's sparking this rally. It started at 10:30. No major news at 10:30, so just tactical rally. Which tactical rally is just as good as a news rally, especially on a day like today where there's really no major news coming out besides the Fed speaking yesterday. But that 415, 414 put credit spread is paying 25 cents in credit, which isn't bad. I would probably want like 30 cents out of it, but it's not paying that yet. So definitely not a trade worth taking for me right now. Especially considering I already have the 412, 411 put credit spread. But yeah, I think that rally definitely secures our 412, 411 put credit spread for today. And they're still going for like 10 cents credit each, I think. So might even be worth adding another couple of them just to get a little bit more profit out of it. We still have, how many hours to close the market? Right now it's 11 o'clock. We close at 4. So we still have 5 hours, but I think it's pretty hard to say that we'll come down to 412, 411. All right, options, alerts. I can't spell. Just opened 3 more. SPY, put credit spreads that expire today. 2-3 expiration, or 2-2 expiration at 8 each. P1F. So I'd say there's a very solid chance that we end the day above 412 at this point. So just open some more of those, just get a little bit more profit out of it. I didn't get a lot of credit to start with, but now I increased the credit to $112. I reduced the average credit to 16, but considering that we're trading at 416 and I'm assuming over 412, I would say that's in the bag. Is YouTube and trading only forms of income, or do I have a day job? No. I quit my day job back in March of 2020. I was working at a call center. Very miserable at that job. I was trying to get a computer science degree and wasn't really into it, I guess. At least the way that they teach computer science, it just wasn't the way that I prefer to learn, right? So I prefer to learn through actual experience and, putting in work. I was doing front-end development and building websites for people on my own as a freelancer, which, I landed a couple clients, but it was just too much of a pain in the ass to land clients. So I ended up starting the YouTube channel around the same time in March of 2020, and then it ended up taking off. Really, I would say it's been pretty gradual. Like if you look at the all-time graph for the channel, it's really been kind of gradual. It's never really experienced a huge boom, I would say. But yeah, it definitely has provided a lot of stability in terms of, making income. I started in March 2020. I've made 34,000, 2.4 million views, but you can see it's just kind of consistent. There's some periods where I see a decent amount of growth, like back in March and of 2022. A little bit of growth in November, kind of starting to pick up right now. Trying to get 10,000 views every 48 hours, but sometimes I get it, sometimes I don't. I guess it really kind of started to take off in November 2020, though, and then it's just kind of been slowly creeping up ever since. And I also have, the Discord that pays around $1,000 a month over on. I got rid of the Patreon subscription because it's a pain in the ass, but making $900 a month from that. The YouTube channel, it's about $1,600 to $1,800 a month, depending on how much content I post. And then trading can be anywhere between, down 500 and up 6,000, even down 2,000 some months. So it's really variable. But the YouTube income and Patreon income is definitely more stable, I would say. I have made it a goal to be more consistent with my profits in trading, though. So I set a goal for myself to make $100 a day through options trading. So far, I've met that goal, but I think I started that goal as of, well, I guess I don't have a lot of data to back it up. Started the goal, I think, on Monday of last week, Monday of last week. Monday of this week on the 30th. So 110, 237. This is for the whole month. Let me do my February log. Let me start my February log, I should say. Let me make sure. Go to the trade tab. Made like $200 yesterday from the Fed event. Yeah, no problem at all. Try to be as transparent as possible. And I mean, anybody can really start a YouTube channel, right? Like, I'm not the only person that makes videos on options trading. So I would really encourage people to really share their experience through options trading. That's what I've tried to do with my channel, show the wins, show the losses, and everything in between, right? It's not... income doesn't always come from options. Sometimes you have huge drawdowns. Like the last couple of months has been pretty painful for me just because of volatility coming down. But I'm kind of learning to adjust to the low volatility. Credit spreads are your best friend for low volatility, I would say. That's what I've learned in January is credit spreads are probably your best friend. If you want to do debit spreads, I would reserve them for high volatility times. So the way that I think of it, if VIX is above 25, then I'm going to be in debit spreads. If it's below 25, then I like to be in credit spreads. It's not, 100%. I'm not just going to stick to that blatantly. Like if I do see that there's a decent trade, a decent amount of volatility to be expected, like yesterday with the Fed, yeah, I'm going to take a debit spread on that. But generally, other times when there's not really much going on, I would probably just stick with credit spreads. But let me type in the trades I made yesterday. So I think I just made one trade. 2 1x or 2121 ticker SPY. This was a call. I can't type. Debit. Jesus Christ. Call debit spread. This is a bullish strategy. Expiration date was for the same day. Traded just based on Fed Chair Powell coming out to speak. I traded this at 10 in the morning. Ended up closing it shortly after he started speaking. 405 strike prices. I opened 5 of these at... I overpaid for them, I feel like, at 55 cents, but I ended up profiting on them anyway. But so that was $175 that I made yesterday. That was the only trade that I made with my daughter being born. I didn't want to spend all of my time, trading. That would have taken away from the experience, I feel like. But let's see. And then today, I opened that put credit spread. So type that one in. SPY put credit spread. This is a bullish to neutral strategy. Expiration date is today, so this is another day trade. Strike prices I chose were 411 for the one that I went long on, 412 for the one I went short on. I opened 4 initially at 22, and then I opened another 3 at, what was it? 8 cents. So average credit came in, where the heck? 3 times 8 plus, well, I can't type. 3 times 8 plus, what is it? 4 times 22 is a total of 112 for 7 of them. So average credit roughly 16 cents. And I think I'm just going to hold that one into max profit. I mean, odds of pulling back to 412 at this point, super low. That would be down 1.25%. And it's up 50% at the moment. They're trading at 7 cents a piece, so I think I'm just going to hold those into zero towards the end of the day. Maybe I'll close it at like 2 p.m., but for right now, still just going to hold. And then last trade, Apple put credit spread that expires tomorrow. So I'll log that one before. Let's see. 2-2. This one expires tomorrow. 2-3 is my expiration date. And this is a put credit spread, which is a bullish to neutral strategy, just like the SPY one I opened today. And then this one is trading on Apple, AAPL. Whoopsies. I'm just having a tough time typing today. Bullish / neutral, and then strike prices I chose were 145, 146. So I sold the 146, bought the 145. I opened a total of 4 of these for 33 cents credit for each of them. So we'll see how that one ends up playing out. But basically, I'm assuming that Apple will be above 155 or 145, 146. Jesus, 146 tomorrow, which is a little bit above where they closed after Powell spoke, and now they're trading at 150. So I feel like this one might be in the bag too at this point. It was a credit spread, put credit spread. Yeah, so this one's already up by $30. I opened up at 34 credit each. Currently, they're going for 27. I would still say that 27 is a decent credit to open them for. And they would have to pull back like 2-3%, which I don't think is really in the cards for Apple. I think that, they're just one of those companies that made so much profit over the last couple of years, they can afford to make their earnings per share look like whatever they want. So, just joined the stream, Frank Lowe, thinking the same thing, jumped out of a position a couple of days ago with a profit. Yeah, I mean, it's definitely a start to a trend bull market, but I don't know if it's really going to last. I think that the next inflation report or something's going to end up screwing everything up, so I would be hesitant to go all in on it, but definitely bullish right now until the next big data. Have I learned mostly from reading or by watching YouTube? I would say I've learned most of what I know I learned the basics from YouTube, right? So I watched The Trading Fraternity. I watched, who else? In the Money, I watched Tasty Trades. Tasty Trades is a little bit more advanced, I would say. But, all these big YouTube names, options YouTube names, to get the basics down, but then, once you have the basics, you actually have to start trading. If you don't start trading and you just learn all of these things, you're not going to make anything out of it. I would say the best thing that you can do is gain experience with trading, actually putting in the trades. I'm a huge advocate for trading with real money instead of paper money. I do understand, if you're living paycheck to paycheck and you can't afford to lose anything, yeah, I would say stick with paper trading, but if you're not part of that population, if you have some money saved up that you're okay with losing, I would say actually putting in real money is more effective because you're going to learn, what it feels like to take a loss and what it feels like whenever you make money, right? I think that it gives a more genuine experience than you'll get out of paper trading. So if you can afford to lose money, I would definitely go with actually real money rather than paper money. Do I see the rally continuing? Yeah, I think that it's going to continue until the next data report says, or the next data report comes in bad. Do I trade Robinhood and charts on Thinkorswim? Yes. So I trade on Robinhood on my phone, usually just because the screenshots are a lot nicer. And then I do all my charting with Thinkorswim just because it's nice that you can customize it to basically whatever you want. There's other things that you could use, like TradingView. I don't like that you have to pay $30 a month or whatever it is for TradingView, so that's why I don't use it. But with Thinkorswim, you have to deposit money into it, so I guess that is kind of the drawback of Thinkorswim versus TradingView. I have like $100 or like the very bare minimum that I need in order to keep this account open. Because I think it was a few months ago they ended up closing my account that didn't have any money in it. But then I deposited some money and they reopened it, and now I can use their charts. It's really dumb that I have to put in money to use their charts, but I guess everybody needs some money, huh? Do I record my trades? Yes. I record them through my spreadsheet right here. So not only am I recording the trades, I'm getting the data out of them, so I'll see how much money I make a week. If this was updated, it's not updated right now, but I will. So this will be 2-1. The end of this week would be 2-3. So far this week made 175 for the first week of February. And then I'll also track, let's see, how much money I make on bullish, bearish, or neutral trades. I look at days to expiration, how many days from the open of the trade till the end of the contract. I look at how much money I'm making day trading or losing money day trading versus swing trading. Let's see what else. Average days held. So I track a little bit of data here. Going to be tracking a lot more data with the app that I'm developing. That will be a lot more useful than what I can get out of this, just because I'm pretty constricted with the space that I have. But the app is definitely going to be a lot better once that gets developed. But yeah, this is how I track my trades for right now. And then once alpha is launched, then that will be my main. Can I explain real quick what is the difference between debit and credit? So a debit spread is basically like buying a call option or buying a put option, right? So you pay a debit in order to buy that call or that put. And whenever you buy it, you think that the stock is going to be above the strike price that you choose. Generally, you actually want it to be above the break-even price by your expiration in order to make a profit. So the way that you can use a debit spread instead, it's going to make it a lot cheaper since you're selling an option against it. So let me set one up for you. So if I think that Apple is going to go to $160 after the earnings report between now and tomorrow. I don't think that this is actually going to happen. I think that it's probably going to be neutral now that it's already gone up by 3%. But if I think that Apple is going to go to 160 tomorrow, I would buy the 155, sell the 160, and I'm going to pay $77 in order to open this option. So it's basically like buying a call, kind of like buying a 160 call. So you're assuming that it would be above 160, and I'm paying $77. So we take the difference between our strike prices, 160 minus 155, and then we subtract the cost for it. So $5 minus the 77 cents that we're paying to open it. That means that we can make $423 if Apple goes all the way above $160 tomorrow, right? But maybe I want to take the opposite trade. Maybe I'm bearish for Apple instead. What I could do is a call credit spread. So I would start by selling the 155, and then I would buy the 160. So this trade, I'm going to get paid. Instead of paying somebody to open this trade, $75, I'm getting paid that $75. And I'm assuming that Apple will stay below 155. So this is kind of like selling a call option, as if you owned 100 shares of the stock. But, 100 shares of Apple would cost you $15,000. So what you do is you're using this $160 call that you're buying as collateral instead of the 100 shares that you would need. Right? So my assumption is that it'll be below 155. If it is, then I get to keep the $75 or whatever in credit. So that's my max profit. And then I could lose all the way up to $425 if this trade goes south on me. So if Apple somehow manages to go from 150 right now to 160 by tomorrow, then I would end up losing $425. Now, the chances of that are very low, but, there's still a chance nonetheless. So this isn't a trade that I would want to take. For me, I would probably, if I was bearish for Apple, you could decrease the strike prices. You'll get $45 in credit. That way you're risking only $200. That's a little bit better. And that, I would say that's a decently likely trade. You could also lower your strike prices to 150, 250, 155. Then you get $75 in credit. You risk 175. That one I would say is a little bit too close for my taste, though. So it really depends on your risk tolerance and what your price expectations for Apple and whatever stock you want to trade is. Why don't I use any online services? With TradingView is the only one that I've seen that's as customizable as Thinkorswim, and I'm not going to pay $30 a month to have a chart when I already have one that I'm using for basically free. When does the next data report release? We have tomorrow. We have some data coming out tomorrow. I use the economic calendar over on investing.com, which I'll leave the link to. My eyes, though, are a couple weeks out with the next CPI report, which is scheduled for the 14th, if I remember right. But tomorrow, we have non-farm payrolls coming in. So that is basically not only, I guess, how much people are getting paid and also how many people are on the payroll. I guess it's actually the measure of the number of people on payroll, which is 185,000 forecasted versus 223 last month. I don't think that it's going to come in as low as the markets are expecting. I think that it's probably going to come in higher, probably along the lines of like 205, 210,000 if I had to guess. I don't think that report's going to be very important, though, considering we've already got unemployment data coming out earlier in the week, and considering, the Fed speech yesterday, I think that has the most weight to it. But we also have PMI, so the Purchasing Managers Index for services. That actually think is gonna have some weight to it, just because of what Fed Chair Powell said yesterday, and half of the economy is doing really hot in inflation with services and housing. In terms of goods inflation, that is coming down, but he said that services inflation is still kind of sticky. So if we do see services PMI coming in worse than expected, which expectations is 46.6, that would maybe confirm that inflation is coming down, and that would be bullish for the market. And then if we see the opposite, if we see this coming in above 46.6, then I would actually think that the markets would pull back. So that's the data that I would be focused on tomorrow. But again, I think that Fed Chair Powell and what he said carries a lot more weight to it than what you'll see for PMI or in really any of the reports tomorrow. And then you also have the unemployment rate, which has been coming in either 3.5 or 3.6 and kind of flipping back and forth. I think that's probably going to come in just in line. I don't think that it's going to change by much. But if it does shock to the upside and we see like 3.7, 3.8 somehow, I would think that would cause some recession fears, which would pull back the market. And then again, that PMI is what I would be looking for. So those are the two reports that I would be looking for tomorrow. We don't have anything for next week. Nothing major, at least. Like crude inventories, not a big event. Michigan report has been important in previous months, but not as important recently in the last couple of months. And then the week after that, that's when we're going to have inflation coming in on the 14th. So that's the big event for the next couple of weeks, and that's what I would be focused on. But in the short term, tomorrow, I'd be focused on PMI, and I would be focused on the unemployment data. If it comes in, 3.7, 3.8, then I would be concerned about the market. But considering that it's just flip-flopping between 3.5, 3.6, considering that most people have two jobs in order to afford inflation, I don't think that unemployment's going to come in worse than expected. SPY to 418 today, I wouldn't be shocked. What's it trading at now? 417 already? Yeah, it's only $1 up from where we're trading right now. That is a Fibonacci at 418.21, so I would be hesitant to say that it would go above that, but anything's possible in this market. And then this Fibonacci is coming from the March 2020 bottom of COVID to the top of the bull market, so definitely has some weight to it. So definitely be looking at 418.21 for today. If inflation comes in cool again, could this be the start to a bull market? It could be. The problem with saying that inflation, or that the markets are going to go up based on inflation coming down, is we have to look at why is inflation coming down. And the reason why inflation is coming down is because of demand is reeling back. So we had a shit ton of demand over the last couple of years because the Fed flooded so much money into the market and we got so much stimulus over the last couple of years. But now they're doing quantitative tightening instead. So they're pulling liquidity out of the market by selling off bonds and letting them roll off of their balance sheet. So once the liquidity starts to drain that they've pushed into the market over the last couple of years, that means there's going to be less money available in the system on top of, people not having a lot of money to begin with. So I would still think that we're going to go into a recession in the next 2 to 5 quarters. So yeah, we could see a decent rally between now and then, over the next 6 to 9 months maybe. Which, if you want to qualify that as a bull market, yeah, I would say, if we might get a good 10, 15, maybe 20% rally, but I think the fears of recession is going to hold us back from seeing that much kind of growth. Like, I would say it would be very, very difficult for SPY to go to a new all-time high by the end of this year. Right now we're trading at 416. The high was all the way at like 480. So that's more than 20 points, almost 25, or sorry, I can't do math. 480 minus 415, 65 points on a $415 stock. I would say we'd be more along the lines of a 10% rally than a 15% rally, just given the fear of recession, which is inevitable in order to get rid of inflation. I don't think that the soft landing is going to happen. I think that it's almost impossible to get a soft landing. Every time in history that we've had inflation, the way that we got rid of it was by going through a recession. But we might, I don't know, it's hard to say that things would be different this time. Maybe the Fed is able to manufacture things in the right way, but I would say it'd be very, very difficult for them. What trades am I in right now? I had a put credit spread that I opened this morning. Apple put credit spread that expires tomorrow. Let's see what else. AMD puts. These two ought to be max loss. Google is reporting earnings today after hours, so maybe that's my hedge against Apple. If one of the tech companies doesn't do well, that's another thing that the markets could pivot on. If one of these big tech companies has a bad earnings report, we might see the growth whacked tomorrow. But also got NVIDIA put debit spreads that expire way out in February 24th. This one's basically at max loss. Bought it like last January, so. And then Bank of America Leaps put option. This one expires in January of 2025. I still think that banks are going to have a hard time lending out money, but with interest rates possibly coming down by the end of the year and aggregate demand would be going up, that actually might not be the best trade to be in for right now, but we'll see. Yeah, earnings are going to come in reasonably well. Earnings are going to come in better than expectations, especially with these big tech names because of how much money they've made over the last couple of years. So what these tech companies do, like AMD did especially, is they can write off employee stock compensation and they can write off share buybacks to increase their earnings per share, right? So AMD, their GAAP earnings per share, which is a standard way of reporting earnings, came in at 1 penny, so they were barely profitable, but because of the share buybacks and the employee stock compensation, they were able to report a 69-cent earnings per share for non-GAAP. So all of these tech companies and companies that have made so much profit over the last couple of years have a lot of leverage to beat earnings because of that. But yeah, Let's check in on those put credit spreads for SPY. They're still only up by $60. That's kind of shocking that the markets could expect the SPY to pull back by that much. But I mean, if there's some crazy event, I would say yeah, but that would have to be like a black swan event, which unlikely, right? Nobody expects a black swan, but it is possible. Looks like we peaked at 417. We're definitely outside of the risk range. That I would actually be a little bit concerned about. I forget what the risk range. I guess I deleted the risk range for this week. I think we are only expected to move like $4 in either direction. Let me pull up my Notion. I think I wrote it down here. Let's get some nip gifts on the Discord. Oh, man. Been having a lot of people spamming new Discords, which is really weird. I wonder if they're getting paid for it or something. Because, like, it's people that have been in the Discord for a long time. So either they're getting paid or they're getting hacked. I don't know which one it is. But SPY expected range is $398 to $412 based on my weekly analysis video. So if y'all didn't see that video already, I'll link it here in the live chat. But yeah, this is the outline for it. SPY crossed above the mother of all trend lines. Relative volume was very low. And we were diverging in terms of RSI, but definitely strengthening now if you look at the daily chart. Lots of strength piling into the market. Almost 70 on the RSI, so that's definitely a bullish look for the market. So as long as you're above 50 RSI, that is bullish. And then below 50 RSI is generally bearish. Hacked, yeah. Yeah, I think most people, I would assume that they're getting hacked, but I don't know. Hopefully my Discord doesn't get hacked. That would be pretty wild. But I do have two-factor authentication, so that would be a little bit of trouble for them to get through. But yeah, I guess we're pulling back from that 417 top. Declining volume, but that's to be expected between 11 and 1 p.m. Actually, 11 and like 2 p.m. You're not going to see a lot of volume coming in. But yeah, we got probably about 10 minutes until I'm going to head back to the hospital, go visit my daughter, and just chill out for the rest of the day. I don't think we're going to come back to 412, so I think I can just leave that trade open. Yeah, no problem. No problem. I'm always here to help. So if y'all have any more questions for the next 10 minutes, I'm here to answer. If you look at Bitcoin, bearish divergence on the daily chart, but it's also hidden bullish. What do I think of Bitcoin? Let's see, Bitcoin. I've never been able to see Bitcoin in terms of like RSI and stuff. What platform do you use? Would that be TradingView? I guess I could look at proxies like GBTC, right? Grayscale, Bitcoin. This is a proxy, so it's not probably 100% accurate, but looking at the daily chart, you're definitely higher in terms of RSI now than you were previously. So that I would actually see that as bearish if you're hotter RSI and you're overbought. There's a better chance of a pullback, but just because it's overbought doesn't mean that it has to pull back, right? So for Bitcoin, I would say still could run, and especially with interest rates coming down, I think that would give it room to run. What's Bitcoin trading at right now? If I had to guess, it's trading like 24,000. Yeah, 23.7. It's actually not up a lot today. It's only up 3% for this week. I would have expected it to go up a lot more than 3% for a week like this, but it is up, 42% for the last month. It's already up a shit ton. I was meaning to dollar cost average and putting into my ledger, but I never really got around to setting up my ledger properly, so I would say like Bitcoin, definitely a good long-term investment. Just considering the distrust that's developing within the traditional banking system and the central banks. Like, people are just losing trust in the Fed and other central banks, European Central Bank and stuff like that. So I think that crypto would be probably a better place. But, I do have some bias there with few grand or about 10% of my portfolio invested in it. So all right. But yeah, I think that's all the trades that I'll answer, and I gotta go pee. So I will end the live session here, and I will catch y'all tomorrow morning at 9:30. See you, everybody.